Executive Summary of Asian View Builders Incorporated. The financial analysis paper provides a comprehensive overview of Asian View Builders Incorporated, the parent company of Cleanergy Power Solutions and Asian View Estates, operating in the civil, structural, and solar power construction industry in Misamis Oriental. The company has consistently demonstrated a commitment to excellence, innovations, and sustainable development since its established on August 22, 2017. Financial Statements Analysis. A comparative analysis of the financial positions for the years ending December 31, 2021 and 2022 indicates a slight decrease in total assets from 1,423,497 pesos to 1,419,997 pesos, primarily attributed to a reduction in cash and non-current assets. Total liabilities decreased from 169,340 pesos to 153,168 pesos, while equity increased from 1,254,157 pesos to 1,266,829. The income statement reflects a positive trend with revenues of 189,425 pesos and net income of 12,672 in 2022 compared to zero revenues and a loss of 42,518 in 2021. Operating activities generated a positive net cash flow of 38,725,000 in 2022, indicating an improvement from previous year. For the recommendations, based on the financial analysis, we recommended that Asian View Builders Incorporated continues to focus on enhancing operational efficiency, maintaining stringent cost management measures, and exploring opportunities for revenue diversification. The company should also consider reinforcing its working capital management and investing in long-term growth initiatives. Additional, it is advisable to continue monitoring and optimizing the utilization of the cash flows to maintain financial stability and support future expansion strategy. Overall, the financial performance of Asian View Builders Incorporated shows positive indicators of growth and sustainability, providing a strong foundation for continued success in the competitive construction market. For the financial statements, it is representation of 2 years income statement and balance sheet. Statement of financial position, Asian View Builders Incorporated, with comparative figures for December 31, 2021. As of December 31, assets, the current assets of 2022 is the 324,724. And then for the 2021, it's 333,763. So other current assets is none. So the total current asset is 324,724 for the year 2022. And then for the year 2021, it's 333,763. For the non-current assets, property and equipment and net is 1,095,273 in 2022. So for the 2021, it's 1,089,734. So for the other non-current assets is none. So the total non-current assets for the 2021 is 1,095,073. And then for the 2021 is 1,089,734. So total asset is equal to 1,419,997 for the year 2022. And for the year 2021 is 1,423,497. So for the liabilities and equity, so current liabilities, trade payables is 150,000 for the year 2022, and then for the year 2021 is 169,340. So for the income tax payable for the year of 2022 is 3,000 only and 168 So for the year 2021 is none. And then the other current liabilities is none, and then for the 2022 and also in 2021. So total current liability is 153,168 for the year 2022, and for the year 2021 is 169,340. So non-current liabilities. Other non-current liabilities for the 2021 and 2022 is none, and then total non-current liabilities for the 2022 and 2021 is none. For the total liabilities for the 2022, total of 153,168, and then for the 2021 is 169,340. So for the equity, for the share capital is 1,375,000 for the year of 2022. So for the year 2021, it's 1,375,000. So retained earnings, so minus to 108,171. So the total is 1,266,829 for the total equity of 2022. And then for the year 2021, so 1,375,000 minus to 120 to 843,000. So the total equity in 2021 is 1,254,157. And then overall total liabilities and equity is 1,419,997 for the year 2022 and 2021.
Statement of Operations, Asian View Building Inc. with comparative figures for December 31, 2021, year ended December 31 in 2022 and 2021. Revenues. Service income, year 2022 is 605,000. Cost of services, year 2022 is 415,575. Gross margin from services year 2022 is 189,425. Other income, none. Total revenues year 2022 is 189,425. Expenses. Administrative year 2022 is 173,585. In 2021 is 42,518. Total expenses year 2022 is 173,585. In 2021 is 42,518. Profit before tax year 2022 is 15,840. In 2021 is 42,518. Provision for income tax year 2022 is 3,168. Net income loss year 2022 is 12,672. In 2021 is 42,518.
Statement of changes in equity and retained earnings Asian Builders Inc. with comparative figures for December 31, 2023. Year ended December 31, year 2022 and 2021. Share capital. Common shares. Beginning balance January 1, year 2022 is 1,375,000. Additional capital build up year 2021 is 1,375,000. Withdrawal in capital, none. Ending balance December 31, 2022 is 1,375,000. Year 2021 is the same, 1,375,000. Preferred share beginning balance January 1. Additional capitals build up, none. Withdrawals in capitals, none. Ending balance December 31. Total shares capitals year 2022 is 1,375,000. Year 2021 is 1,375,000. Retained earnings. Beginning balance January 1, year 2022 is 122,843. Year 2021 is 78,325. Dividend, none. Net income loss per period year 2022 is 12,672. Year 2021 is 42,518. Prior period adjustment. Ending balance December 31, year 2022 is 108,171. Year 2022 is 120,843.
Statement of Cash Flows Asian View Builders Incorporated with comparative figures for December 31, 2021. Year ended December 31, 2022 and 2021. Cash flows from operating activities. Net income. In 2022, 12,672 and in 2021 is 42,518. Adjustment for non-cash items are none. Depreciation and amortization in 2022 is 42,225 and 2021 is 30,438. There's no provision for bad debts, provision for impairment loss, changes in current asset and liabilities, trade and receivable. Inventories in 2021 is 275,784. Other current assets are none. Accounts and other payables in 2022 is 16,172 and in 2021 is 169,340. Other current liabilities in 2021 is 1,749. Net cash from operating activities in 2022 is 38,725 and 2021 is 431,295. Cash flows from investing activities. Changes in property and equipment. In 2022 is 47,764 and 2021 is 127,021. Changes in investment. Changes in other non-current assets. Now, net cash from investing activities. In 2022 is 47,764. In 2021 is 127,021. There's no cash flows from financing activities. So, net increase or decrease in cash. In 2022, decrease in 9,039, 2021, 304,274, cash and cash equivalents January 1. In 2022, 333,763, in 2021 is 29,489. Cash and cash equivalents December 31. In 2022 is 324,724. In 2021 is 333,763.
Ratios. Financial ratios. Number 1, current ratio. The formula of current ratio is current assets divided by current liabilities. Importance on usage. The current ratio assesses short-term liquidity, indicating the company's ability to cover immediate obligation with current asset. A ratio of 2.12 suggests a strong ability to meet short-term liabilities, indicating financial health and flexibility. Solution and answer. 324,724 divided by 153,168 equals 2.12. Interpretation. A current ratio of 2.12 indicates that the company has 2.12 in current assets for every 1 peso of current liabilities. This suggests a strong ability to meet short-term obligation, reflecting robust liquidity and a healthy financial position. Number 2, quick ratio. The formula of quick ratio is current asset minus inventory divided by current liabilities. Importance and usage. Similar to the current ratio but exclude inventory, providing a more conservative measure of liquidity. The quick ratio of 2.12 indicates a robust capacity to cover short-term obligations without relying on the sale of inventory. 324,724 minus 0 divided by 153,168 equals 2.12. Interpretation. The quick ratio also at 2.12 reinforces the company's strong liquidity position, excluding inventory. The company can cover its immediate liabilities using readily available assets, showcasing financial strength. Debt to equity ratio. The formula of debt to equity ratio is total liabilities divided by total equity. Importance and usage. Assesses the proportion of financing provided by debt compared to equity. A debt to equity ratio of 0.12 suggests a low reliance on debt, poor financing, signaling financial stability and lower financial risk. Solution and answer. 153,168 divided by 1,266,829 is equals to 0.12. Interpretation: with a debt to equity ratio of 0.12, the company is relying less on debt for financing compared to equity. This implies lower financial risk and a more conservative capital structure. Number 4, equity ratio. The formula of equity ratio is total equity divided by total asset. Importance and usage indicates the proportion of assets financed by equity. An equity ratio of 0.89 suggests a high level of assets financed by equity, portraying a strong financial position with a substantial stake held by shareholders. Solution and answer: 1,266,829 divided by 1,419,997 is equals 0.89. The equity ratio of 0.89 indicates that 89% of the company assets are financed by equity. This high equity ratio suggests a stable financial structure and significant contribution from shareholders. Gross profit margin. The formula of gross profit margin is gross margin from services divided by total revenues times 100. Importance and usage. Measures profitability on services provided. A gross profit margin of 100% indicates that all services revenues effectively covered associated costs, showcasing efficient cost management. Solution and answer: 189,425 divided by 189,425 times 100 is equals 100%. Interpretation: a gross profit margin of 100% signifies that all services revenues covered the associated cost, highlighting efficient management and maximizing profitability on services.
Operating profit margin. Profit before tax divide total revenues times 100. Assessing operational efficiency by measuring profit before tax as a percentage of total revenues. An operating profit margin of 8.37% suggests a reasonable level of profitability in operations. 15,840 divide 189,425 times 100, 8.37%. The operating profit margin of 8.37% indicates that the company retains 8.37% of total revenues as operating profit after deducting expenses. This suggests reasonable operational efficiency. Return on asset. Net income divide total asset times 100 indicates the efficiency of asset utilization and generating profits. A return on asset of 0.89% suggests a modest but consistent ability to generate profit relative to the total assets. 12,672 divide 1,419,997 times 100 equals 0.89%. The return on asset of 0.89% indicates that the company generates a return of 0.89% on its total asset, while modest suggests consistent profitability relative to the size of its asset base. Return on equity. Net income divide total equity times 100 measures the return on shareholder equity. A return on equity of 1.00% indicates a moderate return for shareholders relative to their equity investment. 12,672 divide 1,266,829 times 100 equals 1.00%. A return on equity of 1.00% signifies that the company provides a 1.0% return to shareholders on their equity investment. It reflects a moderate return relative to the equity base. Cash ratio. Cash divide current liabilities assesses the company's ability to cover short-term liabilities with cash. A cash ratio of 2.12 indicates a strong ability to settle short-term obligations with available cash, highlighting financial stability and liquidity. 324,724 divide 153,168 equals 2.12. The cash ratio of 2.12 underscores the company's ability to cover short-term liabilities with cash. It reflects a strong cash position, providing security in meeting immediate financial obligations.